The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We found a pressure in the soybean complex on Monday. Quarter wheat relatively quiet, a little bit of pressure in cattle. Hogs did finish slightly in the green as we started off the week on a fairly quiet note. Let's take a look at these markets and get analysis today from John Heimberg with Total Farm Marketing. John, good to have you with us. Hope you had a great weekend. I know both of us did when it comes to the Green Bay Packers winning, but I digress there. Market's pretty quiet on Monday. We're getting the news of the farmer aid package rolled out now, $12 billion from the Trump administration, with 11 of that for row crops, it sounds like, and another $1 billion for specialty crops. I just have to wonder if that news that's been permeating throughout the market all day long Monday, if that had some effect on soybeans, or was this more technical in nature to the pressure, John?
In my mind, soybean market's more on the technical side of things, as well as even the fundamental side of things here at this time frame. It's just, again, we're still just looking at a demand pace that's not aggressive enough for this market to be comfortable and at those higher levels that we saw here a few weeks ago. And again, market continues to slide, head and shoulders pattern on the charts. If you're in one of those types of modes, broke that, gives us a downside target realistically down to that gap, that we put together when this thing kind of broke out on the Chinese purchasing news. So we'll have to see if that kind of gets into this. Let's go through some of those fundamentals that are still there, and also just time of year also in this marketplace. China is buying soybeans, and we saw the market kind of pop up a little after the overnight session on news that they're going to be having an auction to move some soybeans out. That obviously allows room for U.S. beans to come in. In that regard, so another small sale, 132,000 tons get reported here this morning. So they're still active in the market. But again, those big numbers I think this market was counting on are just not there. In other words, to trigger this market to hold these gains. So with that, we just continue to slide here. Add into that, South American weather looks very, very good in terms of some good rains here recently, covering a good coverage area as well. So I think that's a piece of the puzzle. Now, again, I referenced last year. Last year, we sold off fairly aggressively. Passed through from the USDA report to the December 19th window. We actually had a low in March beans at 947 on the 19th of December, then proceeded to put a pretty good rally into the 1st of January afterwards. Maybe we're looking at something very similar type action this year. We'll have to kind of watch and see. But if you got beans in the bin, I've been buying puts here now for about a week just to protect them. Still think there's some good value to keep that $11 floor underneath you. And hope we're wrong and this market kicks in. If not, last year if that big South American crop gets put together, we put a low in April. That was sub $10. Not saying we're going to do that type of low this year, given where prices currently are, but definitely there is some downside targets that could be in this market if we rally here into the first of the year. So I'm a little defensive on the beans. Hopefully, maybe get a spot to buy a little here. But again, just the market itself just feels heavy at this moment.
I want to talk about the WASDE report here in a second, but I do want to look at corn, which, compared to soybeans, corn was quiet on Monday. Just feels like we're kind of in that blasé holiday mode here in corn. I mean, trying to find any sort of news, pretty tough right now. This corn market just feels like it's ready to sleep its way into the new year here, John.
That, and it's also very resilient, here in this window. And again, you've seen this big drop in the soybean market, and corn's lost, 3, 4, 5 cents over the last handful of days. You just saw it today, just kind of hold in there. We'll see what the USDA report gives us tomorrow. We'll cover that in just a second. But, if we get a little bit of a break, I could see this thing going down to 440, 439 on the March, and then probably in a bit of a value. We still have a good demand tone underneath the market. Export inspections just above the high end of the range today. So we're continuing to move corn out. We got the November 6th export sales today, maybe a little light, but, given the window, that's when we were kind of at our highs there, but still just under 1 million metric tons as corn sales continue to be strong. So again, that demand side of the market continues to support. Now, the big question still out there is the yield and where we are in those things and how they handle some of the numbers in terms of the balance sheet. We'll get some information on that tomorrow. But I still like corn here at this window, at least as we continue to kind of, I call it base building here. Then if we get some friendly news that this market could be poised to pop a little bit higher, like some of those March calls today, pretty doggone cheap insurance to get some money over top of sales.
Let's talk about that December WASDE report coming out Tuesday morning. Typically, this is a very quiet report. USDA normally doesn't make really any changes at all. Usually we kick the can to January here to get through the holidays. One has to wonder, though, if anything, maybe we do see some production changes. Is the soybean export target potentially cut? Things like that. I guess as you look at this WASDE here coming up on Tuesday, what are you going to be watching for? Any surprises you're going to be keeping an eye out for, John?
Well, obviously, the big question in my mind is, with the lack of a true October report, is the USDA behind in terms of their information? Was November more of an October type report? Now, do we get a November type report tomorrow? So that's the wild card in this thing is what do they do with in my side, the production side of it all in terms of the corn yields, things of that nature. Again, most in the marketplace think this corn yield's coming down. And again, we'll see if that does truly happen as we get closer to the end of year report in January. So that'll be the biggest thing in my mind is where the surprises are as they make some changes on the production side of it, especially in the corn market. Everything I'm kind of seeing and hearing in beans, that bean yield's not going to move a whole lot from here as we get into the end of the year. Just hearing that from producers, how the beans, even though we had a kind of tough finishing weather, some areas hung in there very, very well. So again, expectations tomorrow. Typically December is kind of a placeholder report just to get us through to January. Talking a little bit of adjustments on the balance sheet to bring corn carryover down slightly. Same thing in terms of the bean side of it, making some adjustments to bring carryover slightly higher. So we'll see. So the surprises are definitely on the table in my mind in this market. And, again, that was some of the reason I was looking at some corn length today. What if we do get another bushel per acre cut tomorrow just to kind of keep things in pace? I think the market would react very friendly to that type of news, especially given the demand pace.
And I have to think, depending on what we see out of this WASDE, that could influence maybe some marketing decisions, some risk management decisions from producers. If they got a lot of grain locked up in the bin at this point, they don't want to move it before the end of the year, but maybe depending on what we see, that could change the mindset here. I guess it's just a reminder that you got to be on your toes when it comes to your risk management here, John.
Yeah, I get exactly. Again, this is more of a quiet time and in that regard, but I do think that's a bit of a natural lid on this marketplace. I think that we saw that when we tried to get through the 450 window on March earlier here in the last week or so, that just some producer selling probably kicked in. There's been some areas, if you're in the right spot, you're seeing some basis bumps every now and then just to get some corn moving. Because again, we've got a strong export market and we got a strong ethanol crush that continues to want corn supplies. And obviously with the bin situation kind of changing the whole flow of grains because the ability to kind of store and hold out, we've been getting some things that need to trigger some producer selling. And I felt like we hit that when we hit the 450 level in March here a week ago. So that's still going to be a big piece over the puzzle here, and again, looking forward, I'm still watching D's 26. Talk of more acres coming for corn. When do we start getting some things started there, or at least strong corn numbers, not maybe more acres, but still not seeing much of a drop back, hearing that from both Illinois and Iowa research that's coming in saying a lot of corn on corn going to be planted next year. So we'll have to see how that plays out. But I think from now till about the 1st of February, this corn market, if we get some friendlier numbers in terms of the production side, has some potential to make some moves here to the upside as long as that demand pace can continue.
What about the wheat complex? Any notes there real quick as we wrap up our grain conversation? Fairly mixed across the three complexes on Monday. Any thoughts for you in the wheat trade, John?
Obviously watching what's going on with the Ukraine war again, those things escalate there. And that helped us out, I think, for a couple days last week until we kind of hit some ceilings. The biggest thing on wheat, which is starting to get a little concerning, you got Australia saying they got a big crop. You got Argentina saying they got a big crop. It's just, even though the world price is still driven by the, Russian wheat market and their values, wheat right now just, it's holding. It almost feels a little nerve wracking that it's going to fall apart again, just because somewhere out there, somebody's cranking some wheat out, and it's been a pretty decent crop overall. So demand news, though, has been very good for wheat. If you go look at export sales, you look at export inspections, we're actually at a pretty good pace, compared to where we've been the last couple of years. So that might be that underlying factor that's keeping the $5 price level on higher on the board. So hopefully that can continue to at least support this market here with a $5 type floor.
John Heimberg with Total Farm Marketing joining us here today for analysis. Let's go to the livestock trade. It was a bit of a down day in cattle. Feeders led the way in futures here. I have to wonder if we're starting to bump up against some moving averages in cattle futures, if this is going to be an area that might put a bit of a lid on us here. I know cash trade was substantially higher last week, but just have to wonder if we're going to have the momentum to push through here or not, John.
Yeah, today was a consolidation day in the cattle market. I mean, you're looking at it realistically, a $20 plus run off the lows here in a very short order in that live cattle market. Seasonality is usually in friendly corners here in terms of the cattle market from now to the end of the year. So we'll see if that can continue. The cash market's still going to be the king. That was a heck of a jump in cash trade this week. Again, just reflecting the tight cattle supplies. Throw into that the move in the feeder cattle index and the feeder market too. I mean, we saw nearly a $20 plus jump in about 3 days in the feeder cattle index. So as the sale barns continue to be red hot for the feeder side of it. So again, with that, I am targeting a little bit higher than here, maybe getting that February contract, 100-day moving average around 230 area. That might be a spot. I got some orders working to start building some hedges. But I've been handling a little bit right now, basically bought some puts in. Now we got this rally. We've moved them up a little bit for a small fee all the way out into April and June, just kind of making sure we keep a floor in here. Again, having a fixed risk, or an open risk position like a hedge almost scares me a little bit. We got through some technical indicators last week that actually open up the top side of this market. If we can hold it here, getting over 225 in the Feb was a big swing price. Now we'll see if we can get through those moving averages. I do think we still go challenge that 100-day up around 231. But then if we can get through there, then you might see, the speculators come back in. My mind, I'm a little fearful the cattle market's turning into a Bitcoin type market where people want high volatility, quick swings, and we get the algo traders, momentum traders piling in or out and don't really even care about the fundamentals. So that's a little my concern right here. So obviously with that, make sure we keep our floors in under these cattle markets. Hogs, solid day today, getting that December expiration coming up this week, as we're trying to keep that contract moving. But that swine fever in Spain kind of maybe firing up this market a little bit. Plus, we've seen a nice little turn, at least a slowdown in the lowering of the cash index. So maybe we got a little bit of a cash bottom here.
I was going to say hogs looking like they're finding a little more fundamental support. That was a bright spot on the day, Monday. Any quick notes in the dairy complex here as we kick off the week, John?
Now, it's a difficult market right now, especially with cheese prices continuing to slide. We're kind of holding this $15 handle on the January contract right now, and in the February, I'm a little fearful there could be a bit of a break. Now, $15 psychologically, really since COVID's been a pretty good holding point, has been history even prior to that if you go look at long-term charts. But 2023, we did take this down into the mid-14s. A little fearful that type of a break might be in front of us here if we don't start seeing some type of stability in those product demand prices.
John, any other final thoughts you would have for folks? Anything you would reiterate to them as we wrap up today's show?
I know it's kind of a lull time. We're done with harvest and we're doing a lot of paperwork right now, getting ready for the end of year and tax season. Don't forget about watching those markets closely. Again, there's still some value out there. Make sure you're protecting yourself. Look at where your risks are. Again, if you moved a lot of bushels early, this might be that great spot to own some corn calls. If beans come down to that 1060 window, might be a great spot to get a little ownership in over beans, but don't put a lot into it. Just have something out there just in case. we still got a long way to go. And typically this end of December, January into February windows fairly friendly, the grain markets, but we may have to find ourselves a little bit of floor in that soybean market first.
John, if folks are to reach out, talk with you, and have a conversation with the team there at Total Farm Marketing, what's the best way?
Give me a call, 800-334-9779. Don't forget the email address at john.heinberg@totalfarmmarketing.com and our website, totalfarmmarketing.com.
Always good to chat with you. John Heinberg, Total Farm Marketing. Thanks for joining us here on Market Talk. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.